Today's talk is part of our lecture series, Conversations in Forest History. Our guest today is Tracy Buran Evens. She'll be talking about the history of TIMOs, or Timber Investment Management Organizations. She'll be drawing on her own expertise and experience as a principal of TimberLink LLC. And with that, I'm going to simply turn things over to Tracy.
Great. Well, thank you, Jamie. And it's great to be with everyone this afternoon. I'm happy to be able to share some thoughts. And I think, Jamie, you're going to pull up the slides, correct? He's on mute. So we'll wait for some slides to come up. I was really excited to do this. You know, Forest History Society has a really important role in our industry to preserve what's happened. And today's talk, it's one of my goals actually, is to draw on some of the history in the industry in which I participate in, which is the timber investment management industry. But I participate as an advisor to investors, not as a manager myself. So the goals today, I want to share with you a bit of the history to better understand TIMOs. And also, when we get through a review of some history, want to look at what we might see coming in the future. So that being said, you go to the next slide, Jamie. I like this quote from Henry Ford. I do believe that history is important to help us know what's coming ahead. The farther you look back, the farther you can look ahead. I picked this quote actually outside of preparing this presentation for the Forest History Society. So it's just happy serendipity that it matches so well with the mission of Forest History Society. Before we can look back, though, I wanted to lay some groundwork and foundation, because I believe we've got viewers with all different backgrounds coming at this from different types of industry. So I want to make sure we're all using the same lexicon. So having said that, let's establish a few definitional terms, make sure everyone understands what my presentation is going to be about today. Jamie, you can go to the next slide. First of all, the most important thing, let's talk about what exactly is a TIMO. As Jamie mentioned, the TIMO is an acronym for Timberland Investment Management Organization. I believe Chris Zinkon is credited with coining the term, but don't quote me on that. What a TIMO is a third-party asset or investment manager who serves as a fiduciary for investors. And in the case of today's presentation, we're going to be talking about TIMOs as they pertain to institutional investors, and more on what an institutional investor is in just a minute. Within the TIMO organization, obviously, timber investments are made, and forestry management, property management is a big part of that, which can be done by the TIMO firm, or it can be outsourced through field consultants and other forestry consulting firms. These TIMOs typically create investment vehicles, which in most cases are going to be pooled funds or separately managed accounts. The primary difference being a pooled fund would be similar to a mutual fund you might have in your retirement account, where there's many investors who own pro rata shares in that fund. So they pool together capital to acquire larger properties or an umbrella of portfolio properties. The separately managed account, on the other hand, would be a single investor account, where typically the investor is going to hold fee simple title to the underlying land that's invested in that separately managed account. And the directives and the strategy can be very focused on that investor's needs. Generally speaking, and I'm sure in the questions I might get a lot of challenges on this, but most of the investment thesis around why do you put timber in your portfolio is for diversification. And by that, I mean within any investment portfolio, typically stocks and bonds are always going to be there. But stocks, as we know, can be very volatile, and bonds can yield very low returns. So coupon bonds. So timber came into the investment landscape and as a part of portfolio allocation and management as a way to diversify some of that volatility, boost some of the returns, and more importantly, manage some of the risk. It also does provide good long-term capital appreciation. Finally, I just want to make the comment that most of the investors we're going to be talking about are tax exempt. So if you personally own timber, or if you're familiar with all the complexities of tax laws that pertain to timber investment, that generally is not a concern in what we're talking about today. All right, next slide. Just very quickly wanted to show you, sorry, Jamie, next slide. But quickly wanted to show you a model. Again, what I'm trying to do is make sure we're all talking in the same terms today. This shows you how the TIMO model typically works. This is a very simplified version. You can imagine there's a lot more going on, but you may see where you intersect if you don't actively participate with TIMOs currently. We've got the investors at the top who are supplying the capital. And I think this is one thing that's really important to note. A lot of people are, even in the forestry industry, think that the TIMOs own the land. They play a very important role, but they don't own the land. It's the investors, which we're going to talk about again in just a moment. The investors supply capital that goes into those two investment vehicles, the primary types we talked about, a pooled fund or a separate account. And then that in turn gets invested in timberland properties. So I'm in the middle, the medium shade of green. Around that process are all of the TIMO responsibilities and functions, which I've shown here in lighter green in this chart. The TIMOs have to go out and raise money. That's a very important part of being able to run a successful TIMO. That then goes into the acquisition process to acquire the properties. At some point, there would be a disposition process as well on the exit, which I've got shown there. But once the properties and the portfolio, the properties are bought and the portfolio has been built, those three underlying functions are really the primary areas of management for any TIMO operation. And I'm going to start from right to left. Accounting and reporting, very important. Valuations included in that. Property management, which I mentioned before, can either be internally managed and overseen, or it can be outsourced through a contractor. And then this last on the far left, fiduciary, that's a really important part of the responsibility of a TIMO, to not only manage the risks, but also regulatory requirements, legal. You can see I've got legal and tax under there, and a variety of other responsibilities that fill that investment management role and support the investors' needs. All right, let's go and talk about the investors. Oh, wrong way. This is going to be fun. Everybody bear with us. All right, investor types. So I mentioned I was going to get back to who do I mean when I say institutional investors. And this chart shows you over history who the investors have been. And I don't really want to focus on the amounts or the breakouts here, but again, more to familiarize you with who this group of investors is. Predominantly, it's going to be pension funds, both public pension funds, like state retirement, teachers' retirement funds, shown in the royal blue large section of this chart, combined with the gray, which is corporate pension funds, like Delta, others who have pensions, defined benefit pensions primarily for their employees. There's also significant assets that are held by foundations and endowments, charitable organizations, high net worth and family offices. And then you can see the two other types that are shown on this chart. You got a little sliver over there in orange, which is sovereign wealth funds, primarily treasury and government related investors. And then the green, which includes everybody else, which is a lot of different types, including insurance companies, Taft-Hartley funds, which are basically union pensions, fund of funds. So a fund might make an investment to allocate some money to timber. The general partner interests of the TIMO itself, who may invest some money alongside the investor. It's usually a very small amount, but that does get caught up in the green section. And any other variety, taxable investors, corporate, and others. So again, that gives you an idea of who we're going to be talking about as we move through this history. And then one final note, as we go to the next slide, Jamie, please, is the data you're going to be seeing, including the chart we just looked at. Let me tell you a little bit about who I am, and then we'll get into this survey and the data collection. As I mentioned before, My field of study is the TIMOs, but what my firm TimberLink does is work with investors directly as an independent advisor. So we help them make decisions around their timberland investment portfolio, whether it be picking managers, analyzing deals, solving problems, or just getting them up to speed on various topics of relevance like valuations or management strategies. We've been doing a lot of really interesting things lately with all the interest in natural climate solutions. So we run the gamut of services, but we do support the industry in serving that independent role. A function of our business is, again, studying the landscape of TIMOs. And back in 2004, I believe we started this project on behalf of a client. The client wanted to know who their cohort of investors were. So we began collecting data on assets under management from the primary TIMOs. That survey began officially in 2005 with data collection and has run biannually since then. We're quite proud of it. It's a very unique data set. So I just want to point out that all of the charts and most of the data you're going to see in this presentation do come from our survey. All right, groundwork's laid. Let's move into the history. Again, this is a pretty rich history, actually. For me, it's kind of the history of my career because I started about the end of the arrow, as we're going to discuss. But relatively speaking, this is a new industry and with a very short history of only 30 to 40 years. So what we're going to discuss today are some, if you're a Taylor Swift fan, the Decades Tour, we're going to discuss some decades. And I've broken the history of TIMOs into 4 distinct periods that really naturally fall into these 4 periods. The first is to the far left, begins back in the early to mid 1980s, when the whole concept of timber investing came into vogue. And just as a footnote, I think it may be of interest, the primary reasons that timber started to be added were the ERISA Act was passed, which allowed funds to diversify. There also were some tax changes that made it more lucrative for forest products companies and other timberland owners to divest. And also there was just a need to diversify, again, the portfolio and get some new assets. So these were the very early days, and we're going to talk about it more in depth, but this is where we all began. Moving forward in the mid to late 90s, we kind of had a second generation of pioneers, as I've called the first generation. And these came about as more assets were committed to the industry and more firms started to join. I should have mentioned this to begin with, but you're going to notice some firm names, TIMO names and banners, logos underneath each of these decades. On the first 3 columns, the first 3 gens, as I'll call them, those represent the founding dates for each of those firms. Now, I'm probably going to get questions on this because you're going to say, that firm didn't exist in the 1980s. Well, it exists today in a name that may have had a previous name because of buyouts. We'll talk about that too. All right, so having said that, let's move to our 3rd generation, the mid 2000s, which is really when things started to take off as the forest products companies did some major divestments of land. And then we're going to look at how it looks today. And that's a pretty long gap in our timeline. And I hope to be able to get you on the same page as me as to why that gap has been so long and we haven't seen a lot of change. So let's get into each generation. If we go to the next slide, Jamie, great. So the pioneer days. As I've already mentioned, there became an interest in timber. But as you can imagine, there was a lot of education to be done because this was a new asset. Institutional investors had never looked at timber in their portfolio. There was commercial real estate, and many had begun adding that to their portfolios. So timber kind of got aligned with the folks and fell under the responsibility of the institutional investor staff that were managing real estate. So as you can imagine, commercial real estate and office buildings is very different from a forest of trees. A lot of the work that TIMOs had to do in those days was education. you'll see that I've got here in the far right column, Timber 101. That's what I mean by that. A lot of the marketing and the sales effort was really just education to allow investors to buy into the concept and add it to their portfolio. I think you'll find these numbers quite funny. I do when I look back. Total capital, total assets at this time in 1986 is the data point I'm using. There was 29 million in assets under management. And just to note, it's footnoted on the slide. The early data pre my company's survey comes from NCREIF, the Timber Property Index. So I wanted to give proper credit there. It was mostly from the US, and almost all of the assets were US South. You're going to see the same format as we move through each generation. So let me make a comment here. In the third column, where I talk about the investor objectives, on the first line, I've shown returns. What you're looking at there is for the period stated, in this case, from 1987 to 1994. What you're going to see following is the real return over that period based on the Timberland index that NCREIF publishes. And it was 20%. It was very high. A lot of this was because of the inefficiency of the marketplace. Forest products companies had valued their timber at cost on their balance sheets and really didn't mark to market. Whereas in the investment world, a mark to market valuation is typically the regime. And so there was opportunity seen and a lot of return to be gained by that mark to market. And you could get good deals, quite honestly. A lot of the firms that were started came from banks who had trust departments or from insurance companies who may have had timber loans and things like that. So the early pioneers who founded these firms came from primarily a forestry background with some finance. I think I've covered everything. I don't like to read slides. I try to give you points to reference. So if I've skipped a point as we move forward, please throw me a question and I'll be sure to come back to it. But let's move to the next generation. As I said, assets started to build. By the time we hit 1995, again, based on the NCREIF survey data, we were up to 2 billion. That's quite a steep slope on assets under management. As you can probably assume, correctly so, investors started putting money to timber. So more firms started forming. And that's what we call these second gen pioneers. We about doubled. So back in the mid to early 80s, there were 4 to 7 firms, depending on how you count it. But by the time you get to the mid to late 1990s, we've doubled that number to about 15 TIMOs. Returns did start to compress because once you introduce competition to a market, the efficiencies tend to increase. And so there's not as much goodie, as we like to call it, in the return or the deal. There were also some market conditions that played into this, but the period that extended from the mid 90s, when these second gen TIMOs entered the marketplace, up until we get to our next generation, compressed a bit to 5 reel. So 20 reel up to this point, and then this period forward, we're looking at about 5 reel. And again, it's just because we have more players. We did start to see, though, some diversification in properties. As you can see, about 20% by acres of the investments were now in the Pacific Northwest, and the southern percentage, which previously was about 93, had dropped down to about 63. We were seeing a lot of forestry experience, and I'm going to come back to this point later, so bear with me. But, one of the things that we look at is the DNA of a TIMO. Where did they come from? What's their background prior to launching a TIMO or filling the role they fill? So I think it's important to note that the pioneers and the second gen pioneers were still primarily forestry experienced folks. So having said that, let's move forward to where things really took off. Keep in mind, we were at 2 billion when we left the 90s. Many of you, I'm preaching to the choir here. You guys know what happened in the 2000s. Some of the largest forest landowners, forest products companies chose to divest, IP, Temple Inland, and others. And this proved to be another big bump in TIMO formation. By the time we get to the mid-2000s, we've got about 28 TIMOs raising capital and or managing assets. And this was, I think, seeing these deals come online, seeing the opportunity, also seeing investors starting to accept the premise more and buy in. There was some track record, there was history. But if you look at the capital figures, so in 2005, the total assets under management, and here's where we pick up on the TimberLink survey data. We started our survey at assets under management of 16 billion, which increased quickly by 2006 year end, just a year later after IP closed, to 24 billion. So we've come a long way, baby, from 20 years in the industry, a little less than 20 years actually, from 29 million where we started in 1986. Some other changes. You can see that portfolios really began to diversify. Now, I want to be really clear because I am a data nerd at heart and I like analysis. One reason you're going to see a shift in my data sets from starting to show more non-US properties under this acreage column is because NCREIF only covers US ownerships. There were some non-US ownerships prior to this data point that I'm showing on the slide as of 2005. However, NCREIF would not pick those up. Having said that, there definitely was much more investment in non-US. So we just don't have good data to be able to show the difference or the uptick. But you can see combined between South and Central America and New Zealand and Australia, total assets under management by acres were about 20% of the total assets that investors held. Returns got a little better. A lot of that was in the uplift from these deals. Here's where I get challenged because I want to go off on these rabbit holes, but let me just make a comment about that real quickly and try not to go down the rabbit hole. 11% real, as I said, you get a little uptick from the deals. A lot of times investors and TIMOs will book an acquisition at what they paid for it, but then mark it up to the appraised value, which is hopefully and usually more. And in this era, that was definitely true. So a lot of those returns were just unrealized gains from marking the properties to appraised value after such a large amount of property had been acquired. One thing that I haven't touched on in the previous generations that becomes of note here in the 2000s is up until now, a lot of the strategies offered by TIMOs and a lot of the investors' objectives was just to get pure play timber. They wanted the return from the biological growth, the commodity-based low volatility and low risk of the returns. But as we get into this era, as we have more competition for more TIMOs, we start to see some differentiation in strategies. We see TIMOs starting to layer on debt. Sometimes that helped, sometimes it didn't. And it could also just be simply to be able to access larger deals. But then we also see other more intentional strategies like HBU. And by that, HBU stands for higher and better use. Some TIMOs, as part of their strategy, will buy a bigger forest property and look to sell off smaller, non-strategic, and less productive parcels. And that can be an uplift, particularly when these parcels are in development zones or corridors, or they're in a very high demand recreational market. So we started to see a lot more of that then in the 2000s as an upfront strategy offered to investors. We also started to see on the investor side and within their portfolio silos or allocations, a recognition of real assets. As I mentioned a few minutes ago, in the beginning, we pretty much got lumped in with commercial real estate. And now investors had a separate allocation for real assets like farmland, real estate, timberland, oil and gas, infrastructure. And that continues to today, which made the job a lot easier. Another shift looking at the TIMO side of the ledger is there at this point in time, much less work having to be done on education. There was still a lot of education to be done, but a lot of the investors had more access to independent research that had occurred over the prior 20 years. And some had experience themselves with timber investments. So a lot of the work that TIMOs had to do to bring an investor along to a commitment was about their firm and why pick their firm over another firm instead of explaining why a timber investment made sense. Finally, on this point, one other big change in this era is we started to see a significant amount of capital begin to come in from non-US investors. And as a footnote, we're going to look at the trends and pictures over all these generations when I'm done describing what happened in each generation. So keep that in mind. I've got a chart where you can see that shift and a significant portion of capital begin flowing in from non-US investors. And primarily that was from European investors. Okay, let's move to the next slide. So I call what we're in now, and if you think back to that timeline when we started, this was the largest gap. So we're talking from about 20 plus years, from the 2000s to today. We're going to call it the post-global financial crisis, GFC modern era. There hasn't been a lot of change. If you remember on that last slide, I think I mentioned there were about 28 TIMOs. We've had some consolidations. We've had some TIMOs sell their portfolios and choose to close shop. And we've had others go out of business. So right now, as of year end 2022, which is the most recent period the data in these slides is based on, I've got 20 TIMOs in my survey. If you get the slides and if you care to look back, if you count up the first 3 gens, those are the TIMOs that participate in my survey. They're the big ones that, for those of you who are familiar with the TIMO business, you would know those names. So we do believe it represents most of the assets currently invested, which again, as of year end 22, we're at 55 billion. That's really come a long way from the mid 80s when we were at 29 million. As you can see also, what I just mentioned before, we were at about 25% of the capital coming from non-US investors, where now non-US investors represent the majority, almost 60% of the assets under management, the capital supplying the assets under management currently. So that's been a big shift. We'll talk about separate accounts and funds in a minute. As I show the picture, that would just be much easier to cover there. We also see a much wider dispersion in geographies. The South is still the core. It always has been the majority of the assets. And we believe for a variety of reasons that won't change. But we do see a significant amount in non-US. When you look at South Central America and Australia and New Zealand, we are over 30%. So about 70-30, and it's remained that way pretty consistently over the past 20 years with some variations, 70 being in the US, 30 being non-US. In the returns, as I'm sure you might notice, over a quite long period, beginning in 2007, where we left the last generation, up to year end last year, are 3% real. And again, these are using NCREIF's property index returns. What's been interesting that's occurred in the last, let's call it 10 years, is after the global financial crisis, which really rocked so many pension funds, there were some very serious risk assessments that took place. They had to look at how they make decisions and how they allocate their capital to balance out the portfolio. And that brought them back in many cases to reconsider the amount committed to real assets or to add an allocation to real assets, which tend to be lower volatility, lower risk, but also a little bit lower return. They also, investors, in response to the events of the global financial crisis, definitely showed a desire to exert more influence and control over their investment decisions. And if you are a TIMO watching, I'm sure you can support me on this, that has been a significant change in the business, Whereas if you go back to the very early days, or even maybe 15, 10 years ago, TIMOs used to make all of the decision. Most of these accounts were purely discretionary. Whereas today, particularly new relationships, new accounts, investors prefer to hold more discretion. Not all of the discretion, because then a TIMO would just be a property manager effectively. And most investors aren't looking for that. However, one of their risk management tactics is to participate more in the decision-making, the governance, and the control. Let's see, with that, I think I'd like to, one more point, because we are going to get back to this on my final wrap-up slide. I mentioned this in the comments about my firm. We are definitely participating with investors in looking at forestry as a natural climate solution. I'd be happy to take questions on that topic in the question session. That's a whole separate hour probably to talk about, but that definitely has come into the conversation. We see a pretty even split, not by head count, but by general view of the landscape of investors that are still looking at timber for its real asset diversification benefits to their portfolio, whereas the other half, especially a lot of the new money coming into timber, sees forestry and timber as a solution to some of their net zero, their climate change goals, and other responsible investing goals. So that's been a very important change really within the last 5 years. So that's very recent. All right, let's move to the pictures. So next slide, please. All right, as I mentioned, we're going to take a look at the survey data in some pictures. This is more just for reference. Everything here hopefully supports what I've already shared with you. Total assets under management in this one shows the split between separate accounts and funds being in orange at the top. And by the way, if you're listening, there is a reason that my charts are primarily blue and orange. War Eagle, go Auburn. So the orange, if you notice the big increase, what we've seen is that funds, as assets were attracted to this asset class, funds became much more efficient means of capital raising and capital deployment, and they became much easier to manage for a TIMO as well, to have multiple investors who were pro rata share. So funds quickly became more popular and more successful in the fundraising, particularly when going after these large forest products company deals. We have seen, as if you look to the far right in more recent years, a bit of an uptick in the demand for and interest in separate accounts. It's still pretty split the way it's been over time, but I believe that that's just a reflection of what the comments I made before about investors' increasing desire for more governance and control. All right, let's go to the next slide. This is your total acreage under management. So if you want to go back and look at these slides, you can compare that acreage column, the geography column in each of the generations to this slide. And you can see that pretty even split. It's remained pretty consistently over the periods in that 70 US, 30 non-US split. What you might also notice is that total acres have gone down a little bit. We've seen more REITs, and by this is the previous forest product companies like Weyerhaeuser, Rayonier, Potlatch. They have been buying properties back as well as selling, but we believe overall that's why you're seeing a decrease in total acres, because in recent years we've seen much more activity in acquisitions from REITs. So they own some of the acreage that used to be under TIMO management. And I should have noted that REITs are not included in this survey data. So please note that. Next slide. Finally, just want to go back to that point about the major flip that happened, which was the interest from non-US investors, which are again the orange at the top. You can see we were flooded with European capital. And a lot of the new interest is still, I would say, weighted more heavily to non-US capital. We've seen a lot of interest lately from Asian investors, which is, there have been some that have had assets, but we're seeing a nexus of more interest from Asian investors. And we interestingly are starting to see some US pensions and institutional investors with a renewed interest, particularly as it pertains to these natural climate solutions and ESG related investments impacts. Okay, next slide. Finally, what I'd like to talk to y'all about today is what we see coming in the future. And I may be entirely wrong, so please don't keep a copy of this and chase me down in 5 years to tell me how wrong I was. But what we observe is there is capital out there. A lot of the TIMOs may not have commitments because investors, along with their desire to increase their control and governance, have also gotten more opportunistic. They prefer to kind of hold their capital back and not make a commitment until they see an opportunity or a deal or a property that really hits all the right notes for them. So we believe there's a lot of capital, a wall of capital out there right now. It hasn't manifested in the survey data in great leaps and bounds yet. Most of that, I would argue, is also tied to the natural climate solutions, a lot of it, but there's also a healthy portion with just investors seeking that stability from adding a real asset or upping that allocation. We do believe that that's going to continue to be primarily represented by non-US investors. As I mentioned, we have some new Asian interest, but predominantly European. And we're seeing more funds starting to be offered. We really didn't see a lot of pooled funds come into the market over the recent 10 to 15 years, once a huge swath of funds that were closed around the forest products divestitures were invested and closed. We kind of went silent, and fundraising for funds, as many TIMOs can tell you, got very difficult. But we're starting to see more funds as this new capital tries to find a home. So I think we are going to see more going forward. Again, the US South, we really expect it to remain the majority. Somewhere in the 40% of total assets is what it hovers around historically. And we do see that over time. And, you know, that really becomes a function, regardless of scale and total assets under management. It also becomes a function of investor desires, where they want their money to go. And we typically see that most investors want to be more heavily weighted to the breadbasket in the US South. I've already mentioned more natural climate solutions. We are seeing some new interest in South America. And a lot of that is tied to this natural climate solution demand, particularly in carbon from afforestation in greenfields and brownfields. So South America had a moment back in the early 2000s, shortly after all the forest products company divestitures had been closed. But shortly after that, Brazil passed some laws that made it very difficult for foreign owners to hold land without Brazilian partners. And that really just kind of put the flame out for investors' interest in South America. We are starting to see that come back around again in the most recent couple of years. Currently, the return expectations are 5 to 6 real. We do see deals underwritten at 4 and sometimes lower, but you know, this is a very low returning asset over time. The benefit is it's also a very low volatility because of the biological growth of timber. There is a lot of comfort and low risk in being able to achieve certain appreciation and growth in the returns. So 5 to 6 is a pretty comfortable number. Now, some geographies, some deals, they can go for a lot more or a lot less, but on average, 5 to 6 is the general expectation for a diversified timber portfolio. As far as the TIMOs, I want to make a couple of comments before we move to questions as where they're at now. I mentioned we've seen a lot of consolidations. If you follow the news, you've probably seen some of the larger financial institutions, such as JP Morgan, buying an interest in Campbell Group, which is a long-held TIMO, and others. Nuveen buying Greenwood, which was a smaller TIMO, who served as their property manager for TIAA Cref for a while. And now they've replatformed under Nuveen's larger distribution umbrella. We do see that will probably continue. It's a better distribution network. Most of these buyouts, mergers, and acquisitions allow the timber professionals to continue to operate autonomously in most cases, and which is really critical, and gets down to this next point that is really a personal vendetta or agenda of mine, which is the human resource pool. We really have a need for folks to take an interest in forestry, which again, I'm preaching to the choir to this audience. Graduation rates are down. We know we need foresters, and by foresters, we've got a lot of great folks entering the space, coming into TIMOs from related backgrounds like environmental sciences, wildlife, and other forest policy and other related disciplines. But we really need that biology, dirt forestry. We need folks who really understand markets and who understand how to grow trees, because at its core, that is what drives the TIMO model, is being able to responsibly, sustainably, and successfully manage for a client's investment in these trees and in this dirt. I'm gonna leave it there, I think, Jamie. I think I've gone a little longer, but not too much, so it gives us some time for questions.
Thanks. Thanks, Tracy. You and I were talking about this. For those of the issue of boots on the ground and foresters, the need for foresters.
Yes.
For those of you who will be attending the Society of American Foresters Convention later this month, one of the theme is forestry. It's in our DNA. I'll be on a plenary panel discussing from many angles what is a forester, and this is a frequent problem in the profession of this fear of the future. Will we have enough foresters? Will we have enough folks educated in what you're talking about, getting in the woods and understanding how to actually grow trees? If you're interested, we have a webinar. It was Sam Cook was co-hosting it. He's at NC State, and we had a discussion about the future of forestry and how to talk to potential students, not just students who are already in the program and recruiting them, but how do you get people in the pipeline from before they even get to college, or maybe by the time they've gotten to college? That's something I would ask every forester who's watching, to really start looking around and talking to younger people about the advantages. And actually, Tracy, I'm going to ask you if you wouldn't mind sharing that anecdote you shared with me yesterday about what your son encountered a little bit. You know, so set that up so people understand. But please share that, because I think a lot of people
Among his
understand
classmates,
it.
you mean?
Sorry?
Among his classmates, that anecdote?
Yes.
Yes. Okay, great. Yeah. So what Jamie's referring to is I am the proud mother of a forester who is about to get his master's at Warnell. I do not have a forestry background by education myself, but have investment background. And my first job out of college was with a startup TIMO, and I never left. So I have been in this industry for 30 plus years now, and would never leave. I love it. And there's so much opportunity. So the comment about my son, he saw obviously growing up what mom does and knew some of the people mom worked with and thought this would be cool. Went to forestry school. And he told me he was really surprised that a lot of his classmates thought that with their forestry degree, they could cruise timber, or if they were lucky, they could manage somebody's game preserve or work for the Forest Service. That was about the limits of how they viewed their job opportunities, which I think most people on this broadcast are well aware there's so many opportunities. And the TIMO model offers even more opportunities. You know, I don't want to be remiss though in mentioning one thing. You know, I firmly believe everything I said about the dire need for good boots on the ground foresters, and we've got to develop some more. But you know, the TIMO model only succeeds with a fine balance of that, plus the investment and the financial know-how. So it is a very unique specialty, but bottom line, it falls apart without that biological silvicultural knowledge of folks who understand the woods.
Thanks.
Did I answer your question?
Yeah, I think so. I think so. One, one of the issues I've always encountered is foresters having trouble talking to non-foresters about what they do.
Yeah.
That's a whole other discussion. But that'll matter in terms, recruiting people. Craig Patterson has sent in a question. He says, Dr. Jerry Franklin, who is one of the most respected forest scientists out in the Pacific Northwest, he, in a conversation with Craig, has said that he sees TIMOs and REITs as being the ultimate threat to forests as management is removed from scientists, and we'll say foresters, and given over to money managers. How would you respond to Dr. Franklin's concern?
Yeah, and I've had this question before, actually. That's a great question. It's come up before. I've heard of that quote. Respectfully to Dr. Franklin, I have to disagree. Having, again, TIMOs are my field of study. I know how they operate. I know who their staff are. I know how they make decisions. And, at the field level, at the ground level, decisions on planning, decision on harvest, prescriptions, whatever it may be, those are hardcore foresters making those decisions, because financial folks are involved and they may be running headquarters. They may be filling that fiduciary box. If you think back to the slide I showed on the org chart, but at the property management level, TIMOs are staffed by some excellent foresters. My comments about the concerns is going forward. I think we've got a healthy stock of very well-trained foresters, many who came out of the forest products and paper companies training programs. I've worked with many of them personally, and they're as good as it gets on forestry knowledge, in my opinion. And these forests are evidence of it. The growth, the productivity, the health, the sustainability, the environmental benefits that come from these forests that are owned by my clients. And, this isn't the question, but I do want to get in one point that is really important to me. And I stress this often with friends, but also with our investors. By nature, an investment in forestry is sustainable. If you think of it this way, if an investor is going to put their money into buying the land and investing in it for usually a very long time horizon, they have no benefit from destroying the land or abusing it or overcutting it, because then their investment's worth nothing. It's a very well aligned discipline to be sustainable for almost all of these investors. And then you add to it the current and recent emphasis on ESG and sustainability, and it only enhances that. So I think that would be a corollary and just an add-on in my response, that I only see the requirements to be more sustainable and biologically and ethically sound in the management practices only going to increase going forward, actually.
In a way, this all parallels, or it's a microcosm of forest history in America, where it started out with cut out and get out.
Right.
And then the recognition that that's not sustainable. And so this is what led to the development of sustainable forestry. And so, correct me if I'm wrong, but we're seeing this play out here in this industry. Tom,
yes, for reference, a lot of the investors I work for are looking at 100-year time horizons for their investments in timber. They're committed. That doesn't mean they will hold it that long, but that's how they plan, and that's how they look at the returns coming from it. So they have a high incentive to manage responsibly and sustainably.
And we're hearing that also with the forest carbon markets.
Oh, yes. Yeah, that adds another layer.
Yeah. Tom Giroux asks, do you see this TIMO model moving to farmlands or pasture lands, or even the nut and citrus growing land, so more agricultural lands like that?
That is a very good question. There is a sister but separate asset class of managers who offer ag investments, very similar to timber. And there are some timber managers. I'm going to throw out a few names. Forgive me if I don't call your name out. I'm not advertising for your firm, but Hancock, now Manulife, their natural resources group offers both. Nuveen offers both. Conservation Forestry, which is a smaller firm, They've now rebranded as Conservation Resources and added conservation farming. So the synergies that can come from managing both are clearly evident. But as far as I look at it as an advisor to investors and how I see most of my clients making decisions, those are separate allocations. Now, I want to be sure I understand the question too, because we are seeing a lot of conversion, particularly as I mentioned in South America, fallow ag land being replanted and reforested, particularly as a climate strategy, carbon strategy. But I think pure play timberland is really still the core and represents most of the assets that you see in my survey data.
Frank Taylor is asking how many acres are represented by the $55 billion.
Oh gosh, I'd have to pull up my data. Can I get back to you on that one? After speaking for this long, I can't
Yeah.
even pull up the relevant number. How about, can you post that in a follow-up?
Yeah, so just so
I don't
everyone
have the number
knows,
offhand. I apologize.
yeah, just so everyone knows, Tracy's very generously making her slide deck available. We'll have it on our website. So, and when you go watch this again on YouTube, please share it. We'll have a link to the slide deck there as well.
I'm pulling it up on my phone. I can get to my file. So bear with me, or we can go to the next question. I'll come back. But
Sure.
I'm going to answer your question. Sorry to not have that on the top of mind.
Okay, well, we'll give Frank here another shot. He says, what percentage of TIMO lands under management sell carbon credits?
Good question. Really good question. It is a smaller percentage at the moment than you might think. And that is because carbon pricing has not replaced the highest and best use or the highest dollar value, the max value of timber production so far. And when I make that comment, I'm referencing primarily plantation land, Doug fir in the Northwest, yellow pine in the South. However, where we do see carbon projects on TIMO lands are on hardwoods, Appalachian, Lake States, Northeast, and we're seeing more on some plantation. I think, you're going to see that change going forward. There are a lot of funds that are being raised right now around climate strategies or carbon strategies by some of the major TIMOs. So I definitely think you will see that increase going forward. But at the moment, it's a very small percentage. We don't track that in our survey. I did some research for a client recently, and I was actually surprised by how small that number is. So follow along, because we may have some stuff coming out on that going forward, some numbers, data to put with it. But it's very small. I would guess probably 5 to 10%, very small acreage.
Okay. Keith has given more of an observation, less of a question. But it's
Okay.
U.S. Pacific Northwest is a fairly small region in terms of acres.
Right.
So the dollar amount, the dollar share seems higher than that proportion.
It is. It is. The land's more valuable on a per acre basis.
Okay.
As most of you probably know as foresters. Actually, I'm going to pull up. I can't go into my computer at the moment because the full screen, but I'm going to give you a few baseline numbers just really quickly once I get this pulled up. Okay, so was it Tom who asked the question about acres?
Well, it was Frank.
Frank. And
Yep.
was it US only or both?
How many acres are represented by the $55 billion?
Okay. Yeah, and we do convert hectares on the non-US reporting to acres. So it's about 28 million. There's your answer. 27.8 currently.
Okay.
And that represents the 55 billion. You know what? Yeah, that's about right. That should be about right.
Okay. Great. Thank you.
And then the other question was, yes. So the Pacific Northwest currently in the US represents 3.3 million acres, but it's about 8.6 in total market value. So that per acre runs about 2,600 per acre. It's one of the most expensive regions. So you are going to see a higher proportion on a value scale versus the acreage percentage allocation, if that makes sense, the way I said it.
Carl Blyer asks, is there an average time period that a TIMO holds on to a particular area? He has had a conversation. Whoa, where'd that question go? He says he had heard from a forest manager working for a TIMO that the turnover rate is about 10 to 12 years. So I was wondering if you could address that.
Yeah, that's a great question. I appreciate that question. Thank you. I think that's probably right on the money. And a lot of that is driven by the terms in these vehicles. So particularly when you're talking about a pooled fund, I'm going to put a caveat, we'll come back to it, a footnote. Most of the funds that are in existence that have been closed over history were what we call closed in. They had a fixed term. And that term was about 10 years with some extensions. Most of those funds ran about 12 to 15 years. So you raise the money, buy the properties, they'd operate for that, however many years you had left in the term. And then you come to the end of the 10 to 15 years, you have to sell them. So that probably represents a good figure as far as properties that have gone round trip. However, in separate accounts, I know some investors that have held their properties for 20 plus years or longer in their separate portfolio where there is no term. So term drives a lot of that. The footnote a minute ago, what we're seeing now is a lot of the funds, and I would say actually the majority of the funds that are currently raising capital are open-ended. They have no term. So they have perpetual means to cash investors out over time through redemptions and market valuations, but there is no term, which I think a lot in the TIMO world would agree that's a much more natural fit for timber, which is so long lived. If you're going to offer a fund that has a term of 12 years, that's not even a whole rotation in your timber. So a perpetual open-ended, longer lived fund tends to make a lot more sense for properties under management.
Okay. William Yema asks, what about the TIMO need for what he calls armchair foresters, also known as retired foresters performing part-time analytical work? I'm wondering if William is looking to feather his retirement nest, but that's a good question. Is there, are TIMOs making use of these really experienced foresters?
I'd have to think of specific references and answer that question, but yes, I know lots of, actually, I know someone who had retired actually from industry, from the forest products company industry, and recently took a position and well into his 60s, late 60s, early 70s, recently took a very active full-time position with, I will call, a newer strategy for timber capital deployment. So yes, there are opportunities. And I think, that just underscores the comments we made before about the need for new blood, for a larger pool of human resources that have that dirt experience. If you're on listening and you're of the older generation, props, because those are the best foresters I've ever been around. And I hope younger folks like my son and others have the opportunity to learn from them. So, stay plugged in. I would encourage, and I do think there are opportunities available.
Barry Allred asks, do you think carbon and other non-consumptive objectives are a threat to traditional timber markets?
That's the $1 million question right now. Along with a whole host of questions, and not to go too far down this rabbit hole, because again, this could be a whole separate hour for me.
Mm-hmm.
It's a very interesting topic to me, along with mass timber. So let me try to merge all this together. One of the questions that I like to ask folks is, hypothetically, if you go to the extreme examples, if everybody decides that carbon prices are so good that we're just going to defer harvest and we are going to grow more carbon as opposed to pulpwood, chip, and saw timber. And we also know that mass timber might have more demand? At what point does the market reach crisis? Because you got to let some of that fiber loose. I think those are extremes. I think it does present some interesting challenges, though, as you start to look at supply and demand models for wood fiber. And there are people much better positioned in this business, forest economists, FEA, for risk, to answer those kinds of questions. But as an advisor to my clients, those are the things that keep me up at night and that I try to turn over. I think, Gary, the answer is it presents a challenge. It already is. And let me give finally one specific example. It's presenting some really interesting challenges in deal underwriting and deal pricing. For example, let's say you've got an open auction for a property and you have a buyer who's coming at this hardwood property. Let's use a hardwood property, intending to establish a carbon project where they're looking at a very different stream of revenues with their own expectations of what carbon might yield. They may be willing to pay a much higher price that almost seems astronomical and off the table to someone who's looking at long-term hardwood timber production. And so that's causing some really interesting results in land transactions right now.
Okay. We have a few more questions. Do you have time, Tracy?
Sure. Yeah.
Oh, great. Patrick Flanders asks, what's the optimal progression for someone going into the TIMO field? Would you go investment background first and then learn about forestry, or the reverse, forestry and then learning investing? Or should you do both kind of together? Learn, as he says, learn it all together as a comprehensive subject.
Yeah, that's another good question. And I guess, I'm going to put on my mom hat here and tell you in response what I advised my son, and that was forestry first. Do the field, learn the woods. I don't want to say that anybody can pick up on business and finance skills, because some people, they're just not cut out for that. But forestry is a lot harder to learn, in my opinion, and it takes more practice and time in the forest as opposed to book learning and such that you can get on the finance side. Now having said that, it obviously depends on what area. If you want to be an appraiser, for example, that's a different pathway. If you want to be in a deal making role, that's also a different pathway. But holistically and across the board, generally, I suggest the field first and the forestry education first.
You have to understand the trees to talk about investing in
Yes,
them.
I do. I believe that.
Okay. And I want to remind folks that you're speaking not only, in terms of having advised your son, but you came into this field from investment and finance.
I did.
And had to learn it. So you learned it that way. And so that's another point of, drawing from your personal experience.
Yeah. And, Jamie, I'm glad you mentioned that, because it would be very difficult for someone wanting to get into this field to take the pathway I did today. I came in at a time when it was all startup. It was all new. They just needed people who could do numbers. I mean, really, that's how I got my first job. Is I had a math background in economics, and I understood how to do some of the things. It would be difficult, not impossible, to start with a TIMO that way, because we do have a pretty healthy graduate class from some of the master's programs, Yale, Duke, Auburn started one, UGA, and others. So, those folks come out with the combination already a lot of times. So it would be difficult to come at this from finance unless you want to start in the back office with like accounting and reporting.
Okay. John Dennis asked, how do wildfire and windstorm events factor into investor decisions?
That it's with a new investor, it's one of the first questions they ask, because it's the cultural question from someone who's not really intimately familiar with how outbreaks occur and what the statistics tell us. But once they get past that initial understanding of how the portfolio works and the importance of diversification, they generally get comfortable with it. I haven't seen updated statistics lately, but there have been TIMOs who have done this analysis. And I think over the history in most portfolios, you're looking at 1%, sometimes as high as 2 in loss from bug, fire, disease, damage, and other events. It's very low. There used to be insurance against that. It's very hard to get now.
Mhm.
For those who had a really significant concern from risk of fire, for example. But most investors, what we call self-insure, by just assuming that risk and diversifying around it.
Okay, yeah, in contrast to that, I know somebody who was their personal property,
Mhm.
couple hundred acres. This was their retirement plan, and a hurricane or something to that effect knocked it all down. And so in a way, it encapsulates what you're saying. They didn't diversify.
Right,
It was
right.
all that timber in one place, one event, and that was that. So yeah, so
And you make a good point there, Jamie, too, because, if we were to look at different periods, some of the recent major hurricanes would be an anomaly in that statistic. We did see much higher loss amongst the TIMO land from the hurricanes, because some of those wood markets are centered around the coastal regions that were the most risk, and lower Georgia, lower Alabama. So
when you talk about then diversifying, does that mean you're buying or investing in lands around the country? So in a way you're protecting, you might lose something in the Gulf Coast region, but because you've also got money invested in the Pacific Northwest,
yes.
is that,
Yes.
my model's not too simple. It's
No,
really,
no, I mean,
okay,
that's the core of it. It's geography, as you mentioned.
okay,
But it can also be, I mean, we can look at diversification from a lot of means. It can
okay.
be age class, that you have a mix of young age forests and mature forests.
Mhm.
That helps you with cash flow management to smooth out that volatility. It can mean a mix of product and species. So you may have some hardwoods. Most people don't have a very high percentage, but you can mix the hardwoods and the plantations or pines or other conifers. It can also mean markets. So let's say you are just a Southeast portfolio. You really get quite nice diversification, both in risk of loss, but also performance and investment risk, by having assets all across the Sun Belt. The South Carolina markets are going to perform very, very differently than the East Texas markets. So a lot of our clients will diversify that way on a
Okay.
market basis. Mhm.
Brady Dyer asks, how has the TIMO structure affected the amount of money that gets invested in intensive forest management versus ROI, which I don't know what ROI stands for.
Return on investment.
Thank you.
Yeah. That is a really good question. And, I don't want to sugarcoat it, because I think, I want to recognize that over my career, even short time that it's been, we have lost some support for cooperatives, other research initiatives. I think the TIMOs have been good about continuing to support, but a lot of the support from that came from landowners who are forest products companies. We've also lost, as I mentioned earlier, the benefit of some of the really great management training programs that were part of the paper companies and the forest products companies, where you could get a forester who had exposure to all the functional areas of the business. So those are losses. And I do think that probably the victim of those losses is a bit less intensity around certain prescriptions. However, that doesn't mean they've gone away, because, as I mentioned before, an investor's goal, quite honestly, is to maximize return. So if fertilization, for example, juvenile fertilization is going to yield an economic break-even analysis that benefits them in higher return, they're going to do it. And a lot of TIMOs, most of them, go through those calculations to determine on a stand-by-stand or property-by-property basis whether those investments in intensive applications are going to be beneficial in the long run.
Okay. Tom Kane asks, will investors look to certification programs as we advance? What about ecosystem services beyond carbon?
Those are good. Boy, these are really good questions.
Yeah.
And they're hard ones, but they're good ones. Okay, most investors, and gosh, I wish y'all are giving me some great data points that I need to collect. It would be difficult to do, but I'm going to throw out a number here and guess that, definitely an overwhelming majority, but probably as much as 80% or more of those assets reflected in my survey, particularly in the US, they are certified. So certification is already very important to investors. It's because of their constituents, it's because of their obligations, and sometimes it's just a recognition of the value. Even though sometimes that doesn't trickle down to what you get paid by the mill, it's starting to. We're starting to see premiums from mills on FSC certified wood and others when we sell it stumpage off the land. FSC is common. I would say SFI is the most common certification regime in the US assets, and then ATF, American Tree Farm. But yeah, most investor land is already certified. So I think the answer to that one's easy. The second one is other ecosystem services. Obviously, water is a really interesting topic right now and highly related to what might be next over carbon in forest ecosystem services. Conservation, you may have heard of this new move by investors and some of the environmentalist groups to biodiversity, which at its core meaning, I am very supportive of. And I think forestry as a general rule sometimes surprises the environmentalist groups, but forestry is very in favor of biodiversity as well, maintaining different terrains, different age classes to protect wildlife and other resources in the forest. So I can't tell you with a lot of certainty what the next ecosystem service is, but I think everyone in my industry fully expects that we're going to see more beyond carbon, and water's probably the most likely. Water rights.
Yeah. And yeah, as you alluded to, it's going to be increasingly more important. Just in the next few years, forget decades or
right
half centuries. I mean, it's a critical problem in the West and Southwest.
Yes.
And we'll finish up. Let's see. Well, Craig Patterson, who led us off, asks if you had numbers for TIMOs and job creations on a per acre basis or on 1,000 board feet harvested. Can you talk about how TIMOs might, let's kind of make that a little bigger. Can you talk a little bit more about TIMOs and maybe job creation, or they're serving as job engines in some areas? Is that something that's happening?
Let me think about that. There is a demand. And so I think the best way to answer that question is just my off the cuff observation to try to answer your question. And that would be that it's really focused in, particularly with the TIMOs that are integrated, meaning that they employ their own foresters, they have their own field offices, they do a lot of the boots on the ground forestry themselves, as opposed to outsourcing and contracting with some of the larger forestry consulting firms or field forestry firms. So in those cases, there's quite obviously a very high alignment to the more assets, the more foresters you need to hire. As you go into a new region, you need to hire foresters in that region. So I would say that is probably the biggest driver of job creation. But then, that's not to belittle this need for replacement as we see succession happen in firms. As I mentioned, a lot of these older gentlemen and ladies that I've worked with over my career, they're either into retirement or getting close. We need to replace them. But again, I want to be transparent and not sugarcoat the situation. When you compare, from my recollection of past data I've seen, when you compare the number of jobs that a forest products or a paper company might offer to manage a group of land on a per acre basis versus what a TIMO employs, it isn't quite as high. And I would love for somebody to challenge me on that. And I'd actually love to see that data.
Mhm.
We've looked at similar data points. TIMOs tend to be a little more efficient and they outsource it. So it's a little bit of a mixed bag on how to get to that data point. But I think my general observation is about right, that there were more job opportunities in the various roles for the forest products and paper companies. So
We'll finish with this one. Keith says, it seems to me that regular buying, breaking up, and selling timberlands would impose a significant cost to the timberlands. Is that true or not? For example, we private individuals can't easily afford to buy and sell houses that way.
yeah, I'm gonna make sure I understand the question.
Sure.
So
I can ask it again if you wish.
yeah, ask the first part one more time.
Okay. I'm wondering if he maybe had left a word out, but he says, it seems to me that regular buying, breaking up, and selling timberlands would impose a significant cost to the timberlands. So maybe this trading and buying and selling is driving up real estate prices. Maybe that's what he means.
Yeah, that's where I'm losing it a little bit. But let me speak to what I think is probably on topic,
Okay,
and hopefully addresses his question.
sure.
And that would be just a retort that it's not normal practice to disaggregate timberlands. There are some managers that do that. And as I mentioned in discussing the different generations, there were some strategies that came out with a higher percentage of HBU sales, which were really focused around non-strategic, non-productive parcels. It wasn't a strategy to buy a big wholesale block and break it up to retail, although that has been done too. So let me be clear. Because we have such demand from institutional investors and TIMOs who are out there looking for deals, most of these deals go from one TIMO to the other, and they're seeking very large holdings. So they stay together. I don't see, and again, boy, that would be a great data point, wouldn't it? How much disaggregation has occurred. Now, if you were to take all of IP's holdings as a single holding, yes, that's been disaggregated, but these are still held in very large ownerships, even once you break that down. Finally, I would just add in, there are some managers who actually aggregate. So it's the opposite. The strategy there is to go into the middle markets, buy smaller size properties, maybe a few thousand acres up to 100,000 acres, and build around a market basin, a management unit or an ownership footprint for an investor. So they're actually aggregating up to benefit from economies of scale in that market base under one owner. That doesn't make the land contiguous, of course. You can't pick it up and move it on the map, but it does bring all that back under a common management regime that's looking for sustainability. So I hope that answered the question. I'm not sure if it did, but that's what I can offer.
It sounds very similar to when they were in the Eastern United States after the passage of the Weeks Act of 1911. The easiest way to buy up private land was to go to a lumber company and buy 50,000, 100,000 acres, at a clip. And then once you had that core, you would add smaller, then you would start approaching the private landowner.
Bolt-on, we call those bolt-on acquisitions or add-ons.
Okay.
Yeah, to expand your footprint.
Yeah. And so you had to have that core to start. You weren't going to start with 5 acres. You needed to start with 50,000 and then add around it. So it sounds very similar.
Yeah, and a lot of the TIMOs do that with these larger holdings. What I was talking about is some TIMOs as their strategy start with, maybe 1,000 acre, from a private landowner, they start with that add on because they know of another 5,000 acre deal that's not far away, same market basin, and they'll aggregate that up to a holding and ownership.
So I'll state the obvious. There are parallels throughout history.
Correct.
Well, Tracy, thank you so much.
Thank you.
Really enjoyed this.
Thank you.
We'll have links to her slide deck and also to an article by Brooks Mandel that was published in 2017 what I appreciate is you've kind of updated Brooks's article. He was
Ah,
writing in our magazine about the history of REITs and
I
TIMOs.
read that. Yes.
And so
It's a
he
great
gives that
article.
deeper dive. But I love that now we've brought it up to date, putting this all together.
Yeah, I think if I could make one parting comment, it would be a conversation that I've had with colleagues, attorneys, others that I've worked with over my career, who are about the same age as me. I'm not going to call myself old, but I've been doing
Please,
it over 30
please
years.
don't, because we're the same age.
Yeah, right. I'm getting there. I'm starting to quickly creep up on that retirement period. Others who are of that same age cohort. We've had conversations recently about, yeah, well, I thought I might retire, but then things got interesting again with all this carbon stuff. So I think the parting thought I'd like to leave with your audience is that, not that it's been boring, but it's been pretty stable, as referenced by that long gap I showed between the final two generations we talked about. It's getting interesting again. And I think it'll be really interesting to see what happens in the next few years within the TIMO space and within the forest ownership space as well. I'm sticking around.
Well, again, thank you.